Hi, it's Grace from Nestegg here. Welcome to another episode of our Meet the Managers series, where we get the chance to talk to some of Australia's leading investment managers. Today, I'm lucky enough to be joined by two of the directors of Australian Solar Investments. I've got with me the director, Stuart Nelson, and Chairman Warren Murphy. Thanks so much to you both for coming in today.
Thank you.
Warren, I might start with you first. Before we get into anything, in more detail, can I get you to just explain, what is Australian Solar Investments and what can you guys offer?
So Australia Solar Investments has been formed specifically to invest in solar farms, which are, as one can imagine, a whole series of solar panels on a large scale to sell into the electricity grid, and specifically targeted for investment by the SMSFs sector.
We've seen a number of corporations and wealth management groups, moving away from fossil fuels and the industry. Why do you think that's happening at this point in time particularly?
I think it's very current. I mean, we've just seen bushfires and a whole series of things, so very, very current. But very simply put, solar farms and indeed wind farms are now much cheaper to build, more economic, without subsidies than it is to build a new coal-fired power station. So you've got an overlay of concern around climate change, and you've got the compelling economics of new investment in solar farms.
Stuart, you've been in the business for a long time now. How do you see this sort of investment train? We're moving towards something that's a lot bigger than just investment, in Australian solar and things like that.
I'll answer it. I mean, solar is going to be a very large component of the investment in generation in Australia, partly because we're so sunny. It's such a compelling investment in Australia. And as I said before, the economics of these things now are also very compelling. So you've got a relatively risk-free environment because solar farms require very little operating risk because it's basically the sun shines and you maintain equipment. You don't have a lot of people working there. There's not a lot of moving parts. So from an operating risk, it's very low. We know that it's going to be sunny in Australia, and then we've got the overlay of a dramatic move in society towards reducing carbon emissions. So you put all those things together and you clearly demonstrate that solar farms are going to be a very large component of investment in the sector in Australia.
You've mentioned the, it being always sunny in Australia. Yeah. So how does that factor into it being a long-term investment compared to, say, fossil fuels?
Oh, a key part of any investment in power generation is the resource, and one of the key assessments that you make in investment is how long is your resource going to last. And clearly when you've got a coal-fired power station or a gas station, you've got to see where those fields are that supply those materials and how long are they going to last. Now, we're lucky in Australia, we've had very long-lasting supplies of those materials, and that's what's driven a lot of our low-cost energy. But as I said now, solar is actually cheaper, and there's no question that the sun will shine, and therefore there's no question about the longevity of the resource.
What are the opportunities then that an investment in solar does have for Australian investors that do choose to go down this path?
As I said, it's low risk, low operating risk. It's compelling in its position in the economy. We're clearly moving down a path of lowering our carbon emissions, and it provides a strong, steady yield. That's why we've targeted our structure to SMS investors, because looking for long life assets with a compelling and risk-adjusted, as low risk as possible return, and that's what we can offer through these investments.
And importantly, we've structured our product in two ways. We have an ordinary share offer as well as a redeemable preference share offer. The ordinary share offer is more tailored towards people who are at the accumulation stage in their SMSFs. So that is an investment which we think will grow over time and provide people a good opportunity to make some capital gain. On the other side of the coin, as Warren's just mentioned, we have the redeemable preference share product, which is more for people who are at the retirement stage or about to reach the retirement stage. and that has been geared such that it's going to generate a cumulative 7% return over the life of the product.
There's a lot of positives, obviously, you've just gone through there. Are there any disadvantages for people that are investing in solar? You know, the things that people are worried about, and how are you as investment managers working to mitigate this risk?
Yeah, I think it's a fair comment. There's been a lot of press recently about various solar farms being what they call curtailed, which is reduction of output because of technical concerns about connecting to the grid. We've been in the industry a long time, and so we've seen this coming, and we've targeted specifically smaller projects that are closer to where the load actually is, and by that way we've dramatically reduced that particular risk that is front and centre of a number of institutions in the sector at the moment.
And you obviously do a lot of work with SMSFs. How does that fit in with the rest of your work that you're doing in Australian Solar Investments?
I think that where we said before, we set out to target SMSF. We've taken a lot of advice from one of our key advisors here, Grant Abbott, who's very much a technical specialist in the SMSF industry, and it's really tailored to that. Now, that doesn't mean to say that everyone else who doesn't have an SMSF wouldn't actually want to invest in this, or in fact it's unattractive. It is actually very attractive. There's, as Stuart outlined, there's a growth component, there's a yield component. It's pretty attractive. But you know, at the end of the day, we set out to tailor a product that really suited the SMSF community.
And I think the other point is that there are not a lot of opportunities out there for SMSFs to invest in these kind of products. I mean, a number of the large infrastructure funds which are being promoted by larger organisations really are only available to the large industry super funds and large institutional investors, and a number of people who are out there who operate their own superannuation funds don't get access to these opportunities. So by looking at smaller scale farms, looking at smaller amounts of capital, we open up that market to a new range of investors, and we make the opportunities available that would ordinarily go to large industry funds and institutions.
Stuart, there's an offer at the moment, I think, that you guys are, working through. Can you shed some light on that for our audience and people that might be watching from home?
Correct. We've got a registered prospectus in the market at the moment. As I've just alluded to, there are two products which are available to investors. We have the, if you like, the capital growth product through ordinary shares, and we also have the redeemable preference share product, which generates from the point of commercial operation a 7% cumulative yield. The offer is open for investment now. It will stay open until the end of March. We are set to raise a maximum of $40 million on the ordinary share product and $90 million on the redeemable preference share product. But for SMSF investors, the minimum subscription level, which is the important point, is $25,000.
Stuart, Warren, thank you both so much for coming in today. We can't wait to see Australian Solar Investments back in the studio later this month for our webcast. If you want to check out any more information about Australian Solar Investments, be sure to check out some of the links attached with this video. And as always, stay up to date with us on Nestegg, at our website and through socials.